Hey, what's up guys? Sam here. And I'll be doing the weekly recap video for Friday, January 9th, 2026. So another week is in the books. Market just closed. New all-time high. New all-time high. No one has ever seen higher prices on the SPY than what we saw today. So that's always interesting and fun. So I'd like for you to stick around to the end of the video because I'm going to show you what I think is the biggest signal that's setting up going into next week, but then also probably for another month out. So it'll be worth it to stick around to the end. For now, let's jump into the indexes. We'll take a look at a couple credit markets just to tie that back into stocks. We'll take a look at volatility and just kind of do what we normally do and see what we see. Alright, so we got a lot to cover. I'm going to try to go a little bit faster than I usually do and just kind of call things out as I see it, but I want to kind of get more things into the same amount of time, so hopefully we can do it quickly. Start here with SPY. The weekly chart, it's been a max bull for all of that time that those candles are dark green. That's max bull, so the best score possible. No changes there whatsoever, so that gets a big check. The weekly candle has a higher high, a higher low, a higher close, and a higher open, I think. So by and large, this is an acceptable weekly candle that confirms all the things, right? It's higher high, higher low, higher close, all the things. We move over to the daily chart. The daily chart still doesn't have any trend, at least not the way that the indicator looks at trend. It doesn't have trend right now, so always rely on the lower indicator. And again, you have bull slingshot here, which is a really formidable signal. This is getting kind of messy here. See how that's getting kind of choppy? So whenever this gets really messy like that, you just rely on the lower indicator to tell you the direction of the market. And so far, that's doing a decent enough job. What you really want to see is for this thing to go into trend, so it would look a lot more like this, right? You see how that looks? That's beautiful alignment. You see this entire point in time. And again, there were pullbacks in this. There was a pullback there, there was a pullback there, there was a pretty decent pullback there, and another one there, and another one there. But it didn't register as breaking the trend. And then now we're kind of in this zone here, which is just kind of a mess. So again, anytime that you see this, that's okay. All right, I get that that looks like a mess. What it should look like is this. But that's okay. If this looks like a mess, just direct your eyes below. And of course, that is correctly positioned. The one thing I would note though is that because this is out of trend and you have an arrow here, if at any point you get another arrow here, then that becomes a dominant signal. So with this out of phase, out of trend, you basically are just, the market is basically at the mercy of the next arrow. But for now, it all looks very serviceable here. So that is all good. Now, I do want to make one point here because I'm going into next week and we've only covered one thing so far. We always spend the most amount of time on SPY. The rest of it will go faster. I want to cover one thing here because I'm going into next week. I think everything that we're going to look at in this video is going to present itself as bullish, right? At least so far on SPY, all of this looks fine to me. As good as it could look on the daily and as good as possible on the weekly. So why am I going short into next week? Isn't that kind of a maniac kind of move? It might end up being a bad move. I want to admit that. But I want to show you something here, and I think this is important. And frankly, I think it's something that all of you should already have on your charts, or at least any of you that study Fibonacci, just because it's such an obvious thing to do. So let's focus over here on the weekly chart. What's the local high? The local high was right here, right? That was right around the tariff stuff when they first were announced, right? And then of course you had the tariff tantrum to the downside. So we take that point, the high, we know that point, we know where the low was, and we measure that out, right? And just connect the 2 points, and it gives you Fibonacci extensions or retracements to the upside. And the 1272 is at, what is that, 649? But the one that matters, and let's zoom in, is the 618, which we actually hit today. So that level comes in at 694.45. The high of the day 695.31. So it did exceed it by $1, but it closed below it. Notice that it closed 694.07. So it's closed, below that 694.45 strike. And is there a signal to sell? There actually isn't. I don't really have anything that would even remotely say that. I have a 30-minute down arrow just because of the closing candle wasn't good. But I just really, and again, don't feel the need to follow me on this trade by any means. It's not a trade I alerted. I posted it in the chat if you're in the room. But it's a spot where I think it's good risk to reward, essentially, right? Because this extension is such a big extension off such a major formation that I would personally be looking to sell here. So looking at it the other way, it's like, well, okay, can I short it here? And from a risk to reward perspective, I actually think it's pretty decent. Is there a major signal for it? No, not really. But I wanted to take the time to show you that level because it's a really important one. Let's go to the Qs. I should probably have the same level here on the Qs, so let me run this real quick. We know where that high is. We know where the low was. And even the Qs here have hit the level. Now again, I want to stress, I could be completely wrong about this, but I don't think I'll ever be wrong big. So if I'm wrong on this, I think my risk to reward is completely correct. Now, let me also stress this part. For the vast majority of folks listening to this video, the better play is to completely ignore this idea that we've hit resistance, a major resistance in my opinion, or resistance is incorrect because there is no resistance at new all-time highs. We've hit a major Fibonacci target would be the accurate way to say that. And for most people, if it does trigger a sell, meaning like just a little in-between move, kind of like in chess, like an in-between move, where it has a down move first and then continues in the up move. For most people, it's not worth playing that, right? The in-between move. For most people listening to the video, you might actually want it to sell at that level that I pointed out on SPY, just because it'll give you a better entry on anything that you're looking at long. So let's say it does play out Monday, Tuesday, which again, probabilities would imply that the longs are dominant. But let's say that it plays out Monday or Tuesday. I think the vast majority of folks should still be looking for the buy, right? Just watch the smaller time frames, wait for those to turn, give you a turn signal back to the upside, look for that pullback buy. All right, so that's enough of the disclaimers as to my madness in terms of why I would short the strongest market that has ever existed. On the Qs here, same thing, right? Not a whole lot more. It's not as strong as SPY on the weekly, but it has a really formidable kind of looking pattern here where it kind of looks like a giant cup and handle to me. And if this gets going above the previous highs, I think that this, basically has a resistance zone right about there using the 1618. Kind of interesting the way that played out too, right? We just ran that live, and you see that it kind of acted as resistance, 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 resistance. So if they're able to get it above that, I think it's a very quick trip back to the high, and then you'll have another conversation there. But overall, it looks good. It's not quite as strong as SPY, but not a big deal. Let's go to the IWM. So the IWM's having itself a week. Very squeezy kind of market. Folks like to short the IWM, and therefore it is the most susceptible to a healthy short squeeze. And by far, you can see here on the screen that it is the best looking thing that we've looked at so far. Not only that, but it has a very good looking weekly squeeze, right? So double max bull with a weekly squeeze. That's a major signal. Now, maybe I front run the teaser that I gave you at the beginning of the video. I said stick around until the end. I'll show you the big signal that I'm looking at. Arguably, this one is right up there with it. I think the signal I'm going to show you later is a bigger signal because it's a bigger market, more market cap, more valuation. But the IWM signal here is rather undeniable. That and that is that's pretty good stuff. So I'm not a huge fan of the IWM, but it is an undeniable signal that the small caps here could have themselves a good first part of the year. Let's jump over to HYG. This is our courtesy view of the credit markets. Again, I don't care about HYG. I'm not going to trade it, but I am going to look at it for risk appetite. And really, I'm looking here, and I'm looking to see is this above 80 as an overall price? Is it over $80? And does it have bullish or bearish properties to it? And for right now, the bulls are in charge here as well, right? You're starting to get some green candles. The weekly chart, while it's gray, you can see over here in the top left that the gray, it's actually neutral up. So you have green structure, green momentum. That all bodes well, again, so that's a point for the bulls. Let's check out the dollar. We don't look at the dollar a whole lot, but let's just see what's going on here. Honestly, I honestly wouldn't even be able to tell you what to do if I had a clean read on the dollar. Like if the dollar goes up or if the dollar goes down, I'm not even entirely sure how that would affect the stock market anymore. Usually, just the rule of thumb is dollar down bodes well for stocks. This is starting to get a little frisky in the smallest possible way. So we'll see about this one. I'm going to give no points to either side because I frankly have not seen a huge correlation here in the dollar and stocks. The one that we just looked at, HYG, is actually the much better correlation market. So if you ever want to confirm risk appetite, that's what I would look at is HYG, more so than just straight up dollar. Let's go to the VIX. So the VIX here, casual and classic Friday smackdown on the VIX. Not a whole lot of signs of life here on the VIX at all. It had a pop to the hourly 200, looking at it on another screen. This is completely sided for the bulls. They don't have a daily squeeze here yet either. So for now, this is on the bulls side of things. So we looked at the indexes, right? We looked at 3 indexes. All were bullish. The IWM was the most bullish. SPY was the middle bullish, and the Qs were the third most bullish. We looked at HYG. That one was a point for the bulls. We looked at VIX. That's a point for the bulls. So it's all kind of lining up, telling us one thing, which is more points for the bulls. The only countermeasure that I have, and let's kind of, well, actually, before I do that, let's do this. Because I want to start squeezing in if I can. And I'm a bit of a yapper, so I never know if I'll have time. Too much yapping. But I do want to start looking at different sectors with you guys and just seeing how those are setting up into next week. So what I'm looking for here is, this is my sector view. I'm looking for squeezes and I'm looking for bullish setups. And I see a squeeze on utilities, which I'm going to completely ignore. And there's a squeeze on the Mag 7 index, which I will put in the video description below just to make sure you have it. It's not a particularly great squeeze. So I'm seeing 3 squeezes, one of which I'm ignoring, which is utilities. So there's a squeeze here, but it's on the Utes, so I don't care. There's a squeeze here. This is in communications, so certainly much more interesting. And there's a squeeze here on the Mag 7. So there's kind of a symbiotic relationship there between XLC and the Mag 7. So then what I like to do is say, okay, well, now I do want to, before I move on, I do want to point this out. Is XLC the best place I could be trading? Well, just ask yourself, where do you see green? I see a lot of green here, and here, and here, and here, and here, and pretty much everywhere else is kind of middling, right? So may not be kind of the best place to focus, but just because it has a squeeze, let's check it out real quick. And I think just off the top of my head, XLC is going to be mostly going to be buoyed by things like Google. Meta could be trying to come back, but the scores just are not that great. So Disney surprisingly looks great. Unusual. Got to get EA out of this. Verizon seems to have gone to zero. Yeah, I think this is kind of a conversation around Google here. Not because Google doesn't have a squeeze per se, but it does have kind of a breakout pattern. And the XLC, which is the sector that it's in, also has a squeeze, as well as the Mag 7. So one last thing here, and then I'll end the video with showing you the teaser chart from the beginning of the video. So let's just look at the mags here unto themselves. And again, just looking for squeezes. On dailies, I really don't have very many, so I don't see any there. The only one that I see that has a squeeze is Microsoft. So usually when I see this, and I see things that have squeezes but don't have, like the internal parts of the sector don't look super great. Like on XLC, the big things didn't look all that great. Like Meta didn't look good. I think it could work, but I don't think it looks good. Google does look almost perfect, and it trades perfectly. So that one's certainly in play. Netflix doesn't look great. Disney looked great. But when I see kind of this bifurcation around strength, really what I just do in that situation is just end up buying the index. Right? So in this case, it would just probably be the XLC directly and just kind of bet on the field, or the QQQ and just bet on the bigger field. So that's kind of the conclusion that I'm coming to so far in the video. Let's go back to the teaser, because there is one signal that's clear, and these are my notes from Monday that I share with the room. So for those of you that are wanting to check these out, there'll be a link down below. You can get a $7 trial for simpler trading for a month. You really can't beat that. It's $7. Come check us out. If you haven't done so already, come check us out. It's $7. You might make some money. You might have some fun. I'll promise you at least $7 worth of fun, if nothing else. So check out the link below. But these are the notes that I share with the folks in the room. So I won't cover all these with you necessarily because well, there's just no need to. But if you can pause the video at any point. And the signal that I want to show you is right here. So it's the SPY 3-day chart. Not a lot of folks like 3 days, but I'm a big fan of 3 days. So let's take a look at it. There seems to be some magic in things that are divisible by 3. So this is the biggest squeeze. There is a 4-day, but I don't look at the 4-day all that often. So this is the biggest squeeze in the biggest market that I see right now. Now, the IWM does have a weekly squeeze, so that's technically a bigger squeeze from a time frame perspective, but it's in a much smaller market, IWM. SPY is the biggest market, and it has a very long developed squeeze. So check this out on your own over the weekend, right? Look at it with your own indicators, make sure that it confirms with what you want to see, but basically all the work is done by the labels for me. It's factoring in everything below anyways, right? So I don't necessarily even have to look down here because all the conditions are reflected in the label. And so this is a max bull squeeze with a histogram that does not go negative and is trying to curl up. So where could you go from here? Well, let's kind of end where we started. We started the video. I drew this retracement for you. I think you should have it yourself because it's a very, very large structure that's very obvious, I think. The level is 694.45. Make sure you have that jotted down on your SPY charts and whatever level that is comparable on the SPX. Once you get above that, I think this 3-day squeeze fires long. The 3-day, well, any squeezes in general will go about 8 to 10 bars. So this is on a 3-day chart. 8 to 10 bars times 3 days is about 24 to 30 days. That takes you into February. So all looks very phenomenal to me. If we did not have this level here, I would say this thing just keeps going forever and ever, and very well may just ignore this level. but just be aware of it going into next week. I think regardless of whether you're bullish or bearish, you kind of want to see this level work, at least initially, maybe until Wednesday. Give you a slight pullback first, and then that sets up the longer term continuation trend, potentially after OPEX next week. All right, guys, that's my time. Drop us a like, drop us a comment, drop us a like, drop us a comment. Let us know what you're having for dinner if you don't have anything to say. And I'll see you guys next week. Cheers.